Good morning and welcome to the pre-market homework session and trade plan setup for Thursday, February the 6th, 2014. We are Quantum Leap. If you're visiting us from Twitter or watching on YouTube, Quantum Leap is a self-organized learning environment. We've been around. We have a private chat room on Skype. We've been around for over 4 years. If you're interested in coming in and checking out our room, send me a contact request at Doug_McKay. We come together to talk about the market in the chat room, and then we also do these live morning sessions. And then we also put out what we call our QLTP each night into the trade room, which is the Quantum Leap Trade Tracker, Quantum Leap Trade Plan. And basically it's a sheet that gives you the different levels based on the different methodologies. A couple people has mentioned to me that these morning sessions are running between a half hour and 40 minutes, and that I should try to shorten them up. And I keep trying to find a way to shorten them, but I keep going back to the same thing. I've said there's no shortcuts in trading. I mean, I do this each morning to prepare myself and get into my routine to start trading, and I just can't see where I could cut any of my routine out, because it's comfortable. I have to cover a lot of space, and I don't want to just skip any steps because that's taking shortcuts. So I mean, if the videos are long and people don't want to watch the video because it's too long, well, what can I say? There are no shortcuts in trading, and if you want to take shortcuts, I think the market will give you a haircut. So I will try to go through things as quickly as possible and shorten them as much as possible, but I really don't have anything that I want to take out. So with that said, if you are watching on YouTube after the fact, you might want to skip and go into the middle of the session where we get into the volume profile sheets and more in-depth analysis. But I still need to take a look at the macro to the micro for my own trading, and I'm not prepared to cut that out. So unfortunately, you're going to have to deal with it and live with a 30-minute or 35-minute session. So we got to get going. So this information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than the initial investment. Nobody from Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan. Do your own due diligence. Okay, let's get started. And the one thing I gotta wean myself off of, I watched a couple of the videos the other night and realized I go a lot, so I'm going to try to cut that down. Our year open 1837.75. We are below that. We are in a bearish year. We have a new low of the year that was put in yesterday, 32, one tick below the prior low at 32.25. So that's our month low, our week low. Nothing else really jumps out on the monthlies. Of course, we do have that 18 or 17.2350 that is going to be the key line in the sand below, and we'll get to that in just a few minutes. Globex open 1744.25 yesterday. Going into yesterday's Globex session, we had a high of 1746, a low of 1734.25. And we opened at 1743. So we opened right into that same range, around the 1744, 75, 1743, and right in the middle of that real ugly distribution. Had an open auction in range. We opened in range but out of value. Our normal variation, we broke the IV to the upside. Our opening swing, 46.75 high, 41.75 low for a 5-point opening swing. We had talked about it being the likelihood of being a rotational day, anytime you get market on open orders that are really wide, it's a good indication that you're going to get a rotational day. And again, we had that really big initial balance, 17.25 points, which is, the average is between, 6 and 9 points. You can see lately we've been 14, 11.5, 10.5, 21.75, 17.25. So those initial balances, as they battle out to take control of the day, we're getting this really big initial balance. And the initial balance, for those that don't know, is the first hour high and low. So the high initial balance, 49.25, low initial balance was the low on the day, and our month low at 32. We keep just hammering on that month low. Our intraday numbers were somewhat lower, except for the close, which we closed one tick higher than we closed the prior day. So we really, getting these doji type days as they, auction the distribution zone that we talked about and will be talking about. 1230 number was lower, 48. RTH high was lower, 50.75, and the RTH low, which is our month low, 32, and our year low as well. Our VPOC was basically unchanged at 46. The ATRs, I keep talking about the fact that we're expanding our ATRs. We're now getting to a point in the Globex where it's worthwhile to try to take some trades in the Globex, with a 13-point average true range. 22.5 on the full session and 17.25 on the RTH. Value area was lower yesterday. Again, you can see it's basically been trending down with a couple, minor pop-ups, but the value continues to be accepted lower. Value area high from yesterday, 50. Value area low for 40. A perfect 10-point value area. And then we broke outside of the pocket again. We've been getting those late breaks, and again, the reason why we're getting the late breaks is because they're battling this zone. They're trying to determine who's in control, and therefore we're creating these wide IBs, and then as they fight it out in battle, before somebody actually takes control and gets some type of vertical development, it's breaking outside of the regular pocket, and we're getting later IB breaks, and it's just tough trading when you get this type of a market action. Volume, nothing, nothing heavy. 1.6 in the RTH, just over 2 overall. So nothing pops out there. News today, we already had Canadian trade balance, international trade balance, and unemployment claims. The market really didn't do much off of them. We have sort of started to sell off after initial little pop. We have PMI Canadian PMI at 9, so that's something that you got to watch out for the first half hour of the market. And then we've got FOMC. I think somebody from FOMC is speaking all week, so we've got headline risk there. And then we've got natural gas at 9:30, but nothing else, scheduled. The 20-day ATRs, I think we put in a new low? We put a low in at 44.25, but not 44. So these still hold up. Our 20-day ATR so far for the full session, the 20-day ATR target to the upside 1766.50, and to the low side 1733.25. Let's take a look at the, hey, I just got filled on my my bond runner. Nice way to start the day. Let's take a look at the macro to the micro. The monthly, the 9 EMA and the 20 SMA still have slope and separation. We had this technical gap. We're coming down to close that technical gap. We basically closed it in my mind, and we popped off of it slightly. But if we get below this 1726 area, look for a test and a break of that 23 when we come down to that 2350 area, and likely get a much stronger move down. Probably come down and test the 20 SMA. But we still have the trend intact on the monthly. On the weekly, a little bit different story. We've broken below and we are trading below, and therefore, this trend is somewhat being violated, and we could get a cross on the 9 over the 20 to the downside and a larger move down. So the weekly trend is being violated as it stands right now. And then the daily, we talked about the fact that we do have slope and separation to the downside. We do have this technical gap. We closed the first one we were talking about. We're coming down, and we're closing through a bit of time and a little bit of price. And likelihood we will likely fill that gap sometime in the next couple of days, but it is still open. So look for consolidation, sideways action, or with a slight edge to the upside. Going over to the geometric chart, we came down and we tested this lower line, didn't quite get to it, but a test of the lower line today would bring us down into that 1727.50, and that's a key level for us. It's a naked VPOC. There's a naked VPOC or naked close. We'll take a look at it in a minute. Test of the EMA will bring us up into 1763 area likely, and if we moved all the way up to test the center line today, and we had somewhat of a rally, it would take us up to 1775.44 area, 1775.50, call it thereabouts. Let's take a look at the intraday trend and see where we are quickly on the 4-hour. We've been consolidating on the 4-hour. We closed this technical gap. We've got a MA squeeze going on, and we're trading right there at the squeeze of the 9 EMA and the 20 SMA. So we're seeing weakness. We tried to break above, and we're coming down and testing it from above again. If we break below, I'd be looking for continuation down. But if we can hold, then I'd be looking for a drift up. We'll take a look at where those targets are. Going to the 30-minute. 30-minute, we had popped up, created this technical gap on the 30-minute, came down and closed it, tested the 9 EMA, tried to break below, popped up on the news, and now we're back and we're trading below the 9 and the 20 right now. So we've got no real trend on the 30-minute. And just go down to the 5-minute. 5-minute created this technical gap, and we popped right back up, and now we're coming and testing the 9 EMA from below. We have a naked cross here at 1750 on the 5-minute, and that's likely to get taken out today if we can get back above the 9 EMA, but we are seeing some more weakness on the 5-minute. So let's take a look at the composite. I mean, nothing really changes. I mean, most of this, the same things that we talked about yesterday are going to be relevant today. We've got this 1746 area, which has become the microcomposite, 3-day microcomposite VPOC, and we're in this distribution zone that is got a lot of undetermined fair value, a lot of peaks, a lot of valleys. Really hard to trade this area because you get these wide swings outside of the normal harmonic rotations where they're battling back and forth and trying to determine what's the most fair value within this distribution zone. These areas, I mean, the difference is you take a look at this distribution area between this 64.50 area and this 23.50 area versus the next distribution zone, which is much more defined in around that 1781.50. And it takes a lot of auctioning and a lot of repair to mature this to become more defined. Otherwise, you get a lot of chop back and forth. So again, I caution everybody that's trading this area today that it's hard to trade off of the composite, and you're going to get a lot of severe rotations, and just be careful and pick your levels and know where you're wrong quickly, because you can get chopped up very easily. Of course, the major line in the sand above is 1764 and a quarter. Major line below is 1723.50. I'm anticipating another day of chop in this area as we fight this area out. Now we have the 52.25. That's still the most traded price overall within this distribution zone. So, if we can hold above the 46 area, I'd be looking for a rotation back up towards that zone like we saw yesterday. But the more we fail up in this area between 50 and 53, the more likelihood they're going to have to come down and advertise for buyers below. So I'd be looking for, if we can't, get a strong move up today and come up and, break above this 52, 53 area, then my hypothesis is a likelihood a rotation back down towards that 39, 38 area and likely down 32. And I don't think 32, this is a weak bottom down here. I don't think 32 is going to hold the next time we come down and test it. I think we'll push through down to this 23.50 and this naked gap close at 1722.25, and then we'll see if we find responsive buyers down there. If we do get above that 52, 53 area, then I'm looking for a rotation back up towards that 61.25 area and a push through to test the upside of the balance from below. We haven't tested it. Remember the 50% retracement of the breakout candle, this big candle, that is 55.75, and we have not tested it yet, and we're likely to come up and test it if we get and hold above this 46. So let's take a look at the overnight and start moving our numbers over. Our overnight low right now is down at 44. Currently trading 48. Our overnight high is 55.75. So we went and tested that 50% retracement in the Globex. We have not done it yet in the RTH, so it does not count for those traders. So overnight high 55.75, but you can see how those levels, do work out. And then our overnight VPOC, which I don't think is going to change, is 47.25. So if we open up in this area, we are going to be opening up in range and opening up in value. Our value area high 1750, our value area low 1739. I will be trading the value areas in these circumstances. So my main trade areas here is going to be 1750 and this 1739, really 1739 down to the 1738, which was the range low from the prior day. I think it was Monday. And it's going to be choppy in this area because you've got, you can see the last 2 days, we've got value, right in around that 46 as we battle this zone. So it's, to me, this area between 50 and 39, 38 area is going to be very difficult to trade. On the open, I would look for them to try to take it up and test the value area high, look for responsive sellers coming in. If we see responsive sellers, then I'd look for a rotation back down towards the 46, take out the 46 and this overnight high and the gap close. The gap close is at 1744.25. So I'm looking for a push up. If we don't, we still have 25 minutes, so we might even get outside of the value prior to the open. But if we stay in, look for them to try to push up through the value area and break out of the range and go up to that 52.25, which will be our first target above, and then a push through to the overnight high at 55.75 and that 50% retracement. That's going to be our secondary target above. Okay, do you want to draw it for me? I don't know why these drawing tools are so tough to use sometimes, and you can't see it very well, so I'll bring it to the front. And then the other number above is that 61.25. That's our extended target. with the major trade area, and key line in the sand above is at 64. Below, if we do find responsive sellers stepping in at that value area high, looking for a rotation down to take out the overnight low and close the gap and come down into this 41, which is basically this 41 to 41.75 is a very key level as of late. This is going to be a trade area for me, and I'll be looking for whether the buyers step in there to hold us inside value. Come on. And then a push through. If we break through that level, then a push through to test the other side of the value area down here at this 39 area. And then a break below that, I'd be looking for a test of that 32. And that's going to be our other trade area with our target down there, and then a break below that will take us to our secondary target, which is that 27.75 naked VPOC, and that tests that key line of the downward sloping fork as well. Just doesn't want to draw for me today. Finally. And then below that, of course, is the major line in the sand below, which is that 23.50 to 22 and a quarter. And I'll put 22 and a quarter as the trade area, but the target will be 23.50. I did that opposite yesterday, and I realized that after the fact. Always put your targets in front of your trade areas, if it would let me do it. There we go. And then below 23, we have three key levels: the 16 and a quarter, the 17.11. That's going to be a trade area. And then the big one below is that 17.06, which would be our super extended. I'm not anticipating seeing that. Is it 06? 06.75. So there's my levels for the day. Again, I'm anticipating a pretty rotational day. We do have somewhat of a double distribution day, so if we do get below the midpoint and this 41 LVN, I'd be looking for that rotation down to test the lower distribution and test the value area low. Taking a look at the Keltner, how that lines up. Keltner center line is 1750, which is basically this value area high. If we stay below the Keltner lower channel, is the 44.75, which is basically the gap close and the overnight low. And then if we get above that test of the upper Keltner level, will take us up to 17.55 and a quarter, most likely 17.55.75, which is the overnight high and the 50% retracement of the breakout candle. You can see why I use the Keltner channel and how I use the Keltner channel looking at that. Of course, we keep talking about the gold and this bottoming pattern in gold. You can see that we finally, closed again above the upper trend line of the descending broadening wedge, and we're holding. We're above the 9 and the 12. We're starting to get a little bit of slope, very slight slope and separation on the 9 and the 20. And again, these are strong bottoming patterns. So if we can hold above this, I'm anticipating a much bigger move in gold. And basically, the first target's going to be up here and around that 1362, and then up here and around that 1433. But let's take a look at what it looks like on the chart itself. The overall, microcomposite VPOC are most exciting. This is looking a little bit convoluted in here now, I know, because I've been tracking a lot of the same levels, but I'm just trying to get a better picture of what is going on here. But overall, microcomposite VPOC is still below us down here at that 1241 area. That's on the overall. That's going back to the January the 10th through to yesterday, including today, I should say. So, I mean, value's still below us, but we've got this 3-day where we've, come up and gotten above that 55 area that we're finding some value in here around the 1258. So I'm hoping this is the price that they're going to accept and then finally go up and break above this 1264 and make another run. I think the next time we run up here will be the breakout, and we'll get, above that 72, 74, go out and test that 1282 50 level with a push through to test to the 1300s. If we get back below 55, you got to look for rotation all the way back down here to test this 1241, 1242. I mean, these levels aren't changing. It's constant right now. The overall value areas right now for the bigger microcomposite in this area is 1260. We're above that right now, so we're trading outside of the current value, and then the value area low is 1238. But you know what I think about that 1237 as a key area. If we break below 1237, I'm really looking for a move down towards this 1226 and a possible move to test the other side of balance down at that 1218. And then below 1218, everything shifts down to looking at that 1203 area again. So that's what I'm looking at. Howard, do you have anything that you want to go over?
Yep, I can do a brief overview.
Thank you, sir.
Okay, so let's start with a weekly chart. So in the weekly chart, we had our high of the year, and then we began our move lower. Initially, we came down and tested the 9, rejected. Then we came down, closed below the 9, stayed between the 9 and the 20, and then this week, so far, we're testing well below the 20 SMA. So that'll be a key line in the sand for the rest of this week, today and tomorrow. And right now, the 20 SMA is up at 1775. So ways up to go, but not out of the range of the our ATRs. So that's a key level for the week. And as you can see, we've had very few closes below the 20 SMA. The last time we had a close was back on the week of August 26th of last year. So, we're in territory that we haven't seen for a while. Going to the daily chart. We have, since our high of the year, we've have a 3-wave push lower, had a retrace, and this looks like it could be a 5-wave pattern. And if that's the case, it's possible that we've created a bottom as a corrective pattern with a 3, 3, 5 wave structure. But that remains to be seen. Right now in the process of consolidating. And if we go back a little further in time, starting from this low here, back on June 24th, this level here where we got to at 1734 is the 0.382 retracement of this entire move higher. So that would, if this is a corrective pattern, this is a typical area for a retrace. So if we break through this level to the downside, my target below, I have a couple targets below. An extended C wave target would be down here at around 1712 area. That would be the 3.618 times wave A target. Below that, if we continue lower, the 50% retracement level is right here at 1700. And then below that, if we continue, the 618 retracement level will take us down to 1665 and a half. So those are longer term potential targets if we extend beyond the 382 retracement. So that's what I would be looking at if we do. So let's look at our market breadth. So we are continuing to see further weakness in terms of this middle graph, which shows the 10-day averaged advanced decline. Blue is NYSE, red is NASDAQ. So this is measuring the percent of advancers versus decliners. This line here represents the 50% level where they'd be equal. So we peaked in these two indicators back here in late October. So as price was going up, market breadth was declining. In this last push higher to the year high, we did have a recovery, but it formed a lower high on both measures. And then since then, market breadth has been declining along with price. So, back here was our first indication that market leadership was dwindling. Made one final push to the high, and then now price and these indicators are in sync. Next, we'll take a look at sector performance. Okay, so thus far since the beginning of the year, only the utility sector is above where it opened. Healthcare had been in a strong leadership position for the year, but it's starting to see some weakness. It's back now down around where it opened. All other sectors are below where they opened, as you would expect with the market below the year open. So technology is in third place, and retail has had a pretty strong decline since the year opened. It had the leadership position for most all of last year. So evidently after Christmas, the retailers have been taking it on the chin here. They're down over 11% on the year. We'll take one more look at the Dow Industrials versus the Dow Transports. The system's a little slow this morning. So after a brief open below the industrials, which are in blue, the transports reassumed their stronger performance over the industrials as they had all of last year, but both are below the year open, as you would expect, but they are moving in sync. So with that, Doug, about 8 to 9 minutes before open, I'll turn it back over to you.
Thanks, Howard. That's going to complete our morning market session. As always, trade well, trade safe, and we'll catch you on the flip side. Have a good day, everyone.